Hello, my name is Marion, and I am the owner and founder of Nirvana Tax Advisory and Nirvana Business Consulting. Nirvana Tax Advisory is a tax advisory company that helps taxpayers, business owners navigate the landscape of tax filing, tax resolution, and tax planning. One of the biggest misconceptions that I hear is I just need to file my back taxes. There are folks that might have over 3, 4 years of taxes that they need to file, and they think that once I file my taxes, everything will be resolved. And while filing your taxes is very important, many cases it's just only part of the solution. What many people don't realize is that when you have gone several years without filing your taxes, there may be additional issues that need to be addressed. And that's where tax resolution comes in. Today, I want to talk to you about why filing back taxes and tax resolution often go hand in hand. First, let's talk about what happens when you don't file. The IRS receives the information about your income from a variety of sources. It could be from your job, via your W-2, from your employers, 1099s from clients, banks, payment processors, investment accounts, and other reporting agencies. If enough time passes, you haven't filed a return IRS, you may prepare what's called a substitute for return or SFR. The problem with this is that the IRS only knows what's reported to them, and that's usually all income. They don't necessarily know about the deductions, the credits, and the expenses that may reduce your tax liability. As a result, the amount that they calculate is often a lot higher than what you may owe if you filed a complete and accurate return. This becomes even more important if you're a business owner. So let's say you receive several 1099s showing that your business generated income during the year. The IRS sees that as revenue. They don't see the expenses that are associated with that business. They don't see flag costs, professional fees, mileage, and other legitimate business expenses. So if the IRS is only looking at your income or your revenue and not your expenses, your taxable income is definitely overstated. If you have taxable income that's overstated, your tax bill is also overstated. That's one of the biggest reasons why we encourage clients to get their missing returns filed as soon as possible. The filing of the return is only part of the process, though. The second issues would be the penalties and the interest that you incur because of delayed filing. This is where tax resolution becomes very important. Depending on circumstances, there may be options available to reduce or even eliminate some of your penalties and interest. For example, you may qualify for what's called a first time penalty abatement and other forms of penalty relief. Every situation is different, but these are opportunities that often get overlooked when someone focuses only on filing their return. That's why many tax professionals often package back tax filing with tax resolution. The goal isn't just to file your old return. The goal is to determine the correct tax liability, identify any available relief options, and to create a plan for resolving any remaining balance with the IRS. At Nirvana Tax Advisory, we often include back tax filing as a part of the broader tax resolution engagement. Our clients aren't just hiring us just to prepare their old tax returns. They're trusting us to review their situation, identify the opportunities for relief, communicate with the IRS when appropriate, and help them move on toward compliance. Remember, filing back taxes solves the filing problem, tax resolution solves the tax problem, and in many cases, you'll need both. If you would like to learn more, please click the link to learn what services are available to you. Be sure to subscribe because in future videos, I'll be explaining the different options that may be available depending on your circumstances. Thanks for watching.